Hello everyone. It's Jojo the money maker back on another one. It's really been a while since I posted one here on YouTube. So I'm back with another derived tutorials for derived.com. So today we are mostly going to be talking about the VIX index, the volatility index. Sometimes these you go to YouTube, you look for videos that will explain the different type of volatility index, and I discovered that there was none actually explaining everything. So here's a video about the volatility indexes, and then a little bit of strategy, position sizing, and then a little bit of technical analysis. So let's get into it. First, what is the volatility index? What are volatility indexes? The volatility index, if you go through the derived platform, your synthetic index, you discover there are different volatility indexes. From now, they added the 300 and 200. Before, we only had 100 to 10. If you discover there are 10 1S, that's volatility 10 index for 1 second, volatility index 10 down to the 300 1S. That 1S means 1 second. So let's get straight to it. The volatility index is also called fear index. It's mostly based on stocks, the S&P 500 stocks. The 10 index shows the volatility for the next 10 days period, and then the volatility 100 for the next 100 period, same as the 75, the 50, it's all the same thing. This 1S for the 10 index is a little bit faster than the volatility 10 index. The volatility 10 1S index is faster than the volatility 10. So likewise the rest for all of them, you see anything with 1S in bracket, that's a little bit faster than it. I mostly just focus on the main indices themselves. So all is just calculating. These are just synthetic indices calculating fear index for the S&P 500, and that's just it. You shouldn't bother yourself with all the technicalities. But if you if you are calculating the fear index for the next 10 days period, that's the volatility 10 index, you discover that this will be short term compared to the 100-day period. So this will be more volatile. This will be more volatile than the 100 index. Let me get this out of the way. This volatility 10 index will be more volatile than the 100 index. Mostly when I trade, I focus on the 75 and the 100 index. Those are my favorite type to trade. Then mostly when you're trading, you should watch your time frame that you're trading in. This particular account, I started this account on $10. This is a new account. I started on $10. This was my trade so far. Let me just show off a little. See, the last 50 contracts, it was a $57. So this is a little bit. I also trade takes, see, few losses. You can't win them all. Their wins, their losses. That's forex. That's volatility trading. As far as you're trading, you must meet losses. You just can't avoid it. So you shouldn't just expect to just get 100 trades and get 100 wins. That's not possible. So let me just give a little bit of strategy which I use if I want to trade. Let's just try this on the 75. Let me do a little bit of technical. If you notice, the indicators I use here is the Bollinger Band and stochastic momentum. You can copy the settings there. That's the setting I use. This particular one, I'm on 4 hours time frame right now, and from what I'm seeing, this is an uptrend from down here, the lowest, this period here, the lowest, let me see, the lowest, if you see the last candle there showing from this side here, I can pick here as my low, and then the current market price right now as my high. So you see it's trending upwards. This is an uptrend, but my stochastic momentum is indicating a reversal right now, or this might just be retracements to still be going up. So if you want to trade easily right now, you watch the candles, watch what the candles are doing. This is too uncertain, so I don't think I'll be trading this, because if you see the market right now, it's ranging, it's just in a range, so I'll try and avoid this. Let's go to the 100 index, look for a good trading opportunity. Yeah, this is a good one. This market is not in a range and it looks like it's going down. So this new 4-hour candle, you see it's going down. This is a red candle going down. So if you want to enter this trade, you come to the 5 minutes time frame, come to lower time frame, so you avoid getting liquidated quickly. So I'll try and make this video as brief as possible. So right now, my accounts, right now I traded this account to $9, almost $100. So if I want to trade right now, I will use like 1% or 2% of this account. So I'm going to be trading with, let's say, $2, keeping it safe. Then my leverage, I'm going to be using like 50x. This is risky, but I'm going to be trading 50x. So from what I'm seeing, the market is going down, so down. So you see, this way you won't blow your account quickly. You just trade with what you can afford to lose. So if I lose $2 out of $99, I can still recover back easily from that, instead of going to trade all your accounts, putting in your whole like $50, or that's just being greedy. You take what you can get. I can open like 3 positions from this one now, like this. Let me see this again. Open another position, open another position. So you see right now, this is a risky trade, but I can afford this, so I trade this. I trade bigger accounts, but for the sake of my YouTube, I just started this account recently, and this is it. So next will be risk management. If you notice, when this trade, you see how it's going right now, it's going good, it's going good. So I can come here and set a take profit level, and then set its stop loss level. If you're a busy person and you don't have time to keep checking the chart to see what's going on in your trades, you can just set a take profit level. I'm trading on $2, so getting 100% of this trade is not a bad idea. So I can set my take profit level to like $4, or probably 5 or 6. Don't be too greedy. It's just a 4-hour candle. We're trading just one candle. You watch where that candle is going, and we just trade that particular candle. This is a very simple strategy that anybody can follow. So if I set this now 4, that's 100%. Then the stop loss, since I'm using $2, I'll just set the stop loss on $1. So you see, this is a ratio of 2 to 1. I don't know if that math is correct, but at least I'm getting double of my accounts and I'm risking half of it. So I can apply this. See, set. Then I do the same to the rest of them. If you don't want to stress yourself and open multiple positions, you can just trade with $6 or $10 from that account. That's 10% of the account. Yeah, close to 10% of the account. So I'll do the same thing here. Set this for 1. and then same thing here for set this on 1. So you see, that easy. Trading is not as difficult as people make it seem. Just get yourself a good strategy. You see, this keeps going down, and I'm going to hold this trade for as long as I can. So that's just it. Next video I'll be focusing on let's come this way. I'm going to focus on these binary bots. See binary bot here. If you look down, you see binary bot. So I'm going to be selling a bot that I just made. Very profitable bot. If you don't want to be here opening trades, closing trade, learning technical analysis, you can just use a bot to trade for you directly on your mobile phone. You don't have to install anything. It's just to import the bot, and that's just it. So this is just a brief video. Didn't say much here, but subsequently I'm going to drop other strategies that I use. See this one now. See, this is going well. This is going well. So that's it for this video. So have a nice day. Happy trading. See you all in the next video.